Hi friends, whether you call it Zomato or you call it Zomato, the fact is that this stock has given close to 250% returns in just last 1 year. So in this video, I will help you understand 3 hypercritical points about Zomato. Point number 1 is what is causing this rally that we see in the stock. That is point number 1. Point number 2 is if you have not invested in this stock so far, whether it is a good time to take fresh entry in this stock or should you keep away from this stock. And point number 3 is that if you're already sitting on good profits, is it the time to book profits or is there more juice left in this stock? And everything that I share on this video will be data backed and I will give you totally unbiased commentary. With that, let's get this video started. First critical point is why this rally in the last 1 year. So for this, if you have a look at my screen, you will see the stock price history of this Zomato share. What you will quickly realize is that the stock was trading at around 130, 140 levels back in 2021. That is where the IPO came. I'll speak about in a minute. And then there was a massive crash into the stock. It came down to around 50 rupees level. It remained under pressure, 450 rupees, 60 rupees for a period of about 6 months. And after that, from April 2023 is when the stock has started to give rally. Massive rally, right? If we understand the root cause of this massive fall, then the consolidation and then prices going up, we will learn a lot about this stock. So first point is about the IPO. So the IPO of this company came in July 2021. At that time, the offer price was 76 rupees. And the stock got listed at a premium of 53% and got listed at around 116 rupees per share. If I now take you to the chart, you will see that at around 120 rupees, the stock was trading nicely. In fact, there was some ups and downs, 130, 140. It went up to 154 rupees at that time. And then the main fall started from January 2022. There was a massive crash here. What were the reasons for it? Actually, 2 or 3 reasons that I want to speak about. Number 1 is that if you look at Nifty at that time, January 2022, it was at 18,255 levels. And by March 2022, it came down to 16,250 levels. So basically, Nifty lost 2,000 points at that time. That is a significant fall, around 11%, 12% fall. And at that time, majority of the tech stocks were falling at a far greater rate than Nifty. For example, Nike was down. For example, Multibagger was down. Zomato crashed by close to 20% because the overall sentiments in the market was that the stocks were falling. Second key reason that Zomato was not doing well at that time was its revenues and profitability. Have a look at the data and you will see in Q3 2022, the revenues were flat, 14.2 here. If you look at the EBITDA, they were still making losses at that time, minus 2.7 here, you can see clearly, right? So all in all, from a fundamentals perspective, Zomato was still making losses at that time. So all of these fall that you see from January 2022 to almost August 2022 was overall market environment, as well as Zomato fundamentally was not doing well because the revenues and the profits were really in losses actually. If you look at the data from August 2022 to August 2023, the stock remained under huge pressure. It was at around 52 rupees level, 50 rupees level. And the key reason for that was there were high profile exits from the company. Have a look at this timeline and you will see 31st of August 2022. Their deputy CFO left, then their head of new initiatives resigned, their co-founder left, and then more importantly, January 2023, their CTO. A tech company CTO is one of the very important posts, and that guy left in January 2023. So the stock remained under huge pressure up until January 2023, but all of a sudden from April 2023, the stock started to give massive rally. Now let me explain to you why this rally has happened. So the key reason for this rally was in April 2023, they announced their results. And those results, if you look at the data, you will see that the revenue started to grow by 57% year on year. And more importantly, this was the first quarter when Zomato actually became EBITDA positive, which is 1% you see here, excluding the Blinkit business, right? Overall, they were still in losses. They were still EBITDA perspective minus 7% down, but they made their food delivery business profitable. Again, I will speak about that in a minute. But point here is that when the news come into the market that Zomato, excluding Blinkit, has become profit-making company, and that is where the company's share prices started to soar like anything. And this is not just with Zomato. I have seen this happening with Multibagger as well. In December 2023, they became profitable first time. And look at the stock prices right now. In fact, I created a detailed post about Multibagger analysis on my YouTube member community. You can consider subscribing to my YouTube member community if you want to learn about a lot of fundamental analysis of stocks, mutual funds and various assets. You will find the link in the description. Now, this did not happen all of a sudden overnight. What we see in the data is that from last few quarters, if you see their EBITDA, you will see that the loss was narrowing down from minus 2.25 to minus 1.50, minus 0.60, minus 0.38 and so on. It was in Q4 23 results that Zomato became positive EBITDA excluding the Blinkit business. Now comes the $1,000,000 question that Rahul, what is going to happen in future in terms of the stock prices? So for that, what I want to do is I want you to pay 100% attention because I'm going to deep dive into their P&L account. So for example, what you see on my screen is their December 2023 results, and what you will notice is their complete business model there, right? Let me break it down for you in simple few minutes. First key point is that their food delivery business, which is what you and me use to order from Zomato, is contributing to 56% of their revenues. Point number one. Point number two, you will see is that hyper pure business, which is B2B business, is contributing to 23% of their revenues, and this is their business where mainly they are delivering to restaurants directly and earning some money from restaurants, right? So this is their hyper pure business. Coming to the third point, which is quick commerce, which is Blinkit, is contributing to around 18% of their revenues, and the remaining going out is 2%. So let's not bother about that. What is more important here is to understand each of these business units and understand what are the future prospects, because that is going to give us a lot of details about whether the stock prices are going to go up or down. So if you look at the food delivery business, the first point you will note here is that their gross order value, let us say, is around 8,486 crores. What is this gross order value? So let us say in a day on Zomato's platform, there are 100 rupees worth order that are placed. That is called gross order value, right? Second point you will see is the adjusted revenue here, which means that not entire 100% goes into Zomato's pocket. Majority of this money goes into the restaurant owners, right? And if you look at the data, you will see around 2,000 crores out of 8,400 crores goes into Zomato's pocket, and the remaining money goes into the restaurant owners, right? So 25% of the gross order value that is placed on Zomato goes into Zomato's pocket. So if I take an analogy of 100 rupees here, 100 rupees worth order booked, out of which 25 rupees goes into Zomato's pocket and 75 rupees goes to restaurant owners, right? Now, if you see the growth rate here from a gross order value perspective, it is growing at around 27% year on year, which is a very, very good rate, right? So this is a good sign. Second growth we see is in the adjusted revenue, that what is the share of the gross order value that Zomato is earning? It is at around 29% year on year growth, which is again very, very good growth rate. Then comes the contribution, which is around 600 crores. What does contribution mean? Simply means that out of that 25 rupees that is going to Zomato's pocket, how much they are spending in the variable cost, which is the petrol, for example, or delivery cost, or there are bunch of variable costs. And if I remove all the variable costs, then I get to 6 rupees. So we started with 100 rupees of gross order value, out of which 75 rupees went into restaurant owners. And out of the remaining 25, 6 rupees is what Zomato is left with after taking all the variable costs, right? So 6 rupees is the contribution. But more importantly, if you see this contribution as a percentage of gross order value, that is going up, which is a very, very good sign that operationally Zomato is becoming better and better because they are able to reduce their variable cost. And when a tech startup is able to reduce their variable cost, then they are going to do really, really good in the future because their fixed cost is already invested. And as long as they can operationally be lean, then they can add a lot of money into their bottom line, right? I hope this concept is very, very clear to you about tech startups. And finally, you see here adjusted EBITDA, which is 252 crores, which is a very, very good number right now from a food delivery business perspective. Let's go to the second business unit, which is Hyperpure. And if you look at the growth rate of Hyperpure, it is growing at 104%. That is a massive growth rate. From this perspective, it is looking very, very good. But point you will also note is that this business is still a loss-making business. If you see the adjusted EBITDA here, it is minus 53 crores. Last year, it has come down to minus 34 crores. So it is coming down. But in the last 3 quarters, if you see, it is stable. I think when this business becomes profitable, when the EBITDA for Hyperpure business also becomes positive, that is going to add a lot of value into their PAT, which is profit after tax. And that will make Zomato more profitable in the future. Whether this can happen or not, neither I can guarantee nor the Zomato can guarantee. And this is where we take our bets. Let me go to their third business, which is Blinkit, quick commerce business. And if you look at the growth rate here, the gross order value is growing by 103%. The revenues are growing by 114%. Very, very good growth rate here. But again comes the problem with the profitability. If you look at the EBITDA number here, it has come down from minus 227 crores to minus 89 crores. So the loss is now narrowing down. But one day, if the Blinkit business also becomes positive, then it will again start to add lot of profitability into the bottom line. Coming back to the last business, which is going out only 2% right now, but it is also growing at a staggering growth rate of 154%. And more importantly, it is already a EBITDA positive business. So if I present to you now the consolidated view, what is going on here, overall the Zomato is profitable here. If you see the profit for the period, last period they got 138 crores. And if you see how the losses have coming down from minus 347 to minus 188 to 236 and 138 crores. So the trajectory of the profitability here is looking very, very positive. But the key point that you need to remember is that 56% of their business, which is coming from food delivery, is a profitable business. But the remaining 44% business that you see, which is Hyperpure, Blinkit and Going Out, is still making losses. But my view is that in the next 2 years' time, if Zomato makes these 3 business units profitable, and as and when it does this, and as and when these things come out in the news, the prices are going to soar. Again, this is not a stock recommendation. There are still a lot of positive points and a lot of risks that I want to present to you. I hope you continue to watch this video because there is a lot of value still left that I need to deliver in this video. So far, if you're liking this video, humble request for you to hit the like button. Let me know in the comments a simple thank you. It will motivate me to do a lot of research for you at zero cost. With that, let me now speak about one of the very, very positive news about Zomato, which is that they're sitting at 12,000 crore rupees of cash. It's a cash rich company. There is no debt the company has. One of the things that I am not able to understand right now is that when this company have already started making profits only from the last 2 or 3 quarters, how are they sitting on this huge cash? 12,000 crore rupees is not a small money. Where have they got this money from? Because if you look at their P&L, you will see that only in the last 2 or 3 quarters, they've started to make profits. So this point I'm still investigating. I just need to go a little bit deeper into their balance sheet and try to find out where is this cash coming from. But if you look at the opening cash balance, from the last 1 year itself, they are sitting on 11,000 crore rupees of cash back in 2023. Now they are sitting at around 12,000 crore rupees of cash, and the company right now has no plans to give the money back to its shareholders. In a way, this is a very, very good news that the company is sitting on a very, very huge cash and there is no debt, but we still need to investigate. And if any of you have already done the analysis, let me know in the comments. I'd be happy to learn from you as well. But in the meantime, I will also do my research to find out how come they've got this much of cash sitting in their balance sheet. Rahul, you are only talking about good things about Zomato. You are totally biased. Give me 2 to 3 minutes of time and I will now present to you 2 big risks with Zomato business, okay? Because I promised to you that I'll be unbiased. First big risk about Zomato is that very recently they got a GST notice, which is around 400 crores plus the interest or the penalties that they will have to pay. They are going to fight out this with the court. I don't know whether they will win or they will lose, but the point remains that if they have to pay this money, 400 crore plus interest, then it is going to consume some money from their cash. And the moment if this comes out in the news that they are paying this money or they are not paying this money, it is going to have impact on the stock prices. If they are going to pay this money out, then what is likely to happen is the stock during that 1 or 2 or 3 days or that week is going to remain under pressure and it might fall by, let's say, 4%, 5%, 8%. So it is entirely possible that this risk plays out and they have to give that money out. Again, this is not a huge risk in my view, but still this is a big risk. Second risk is even bigger than this. For this, have a look at their shareholding pattern and you will see that there are no promoters right now in the company. The stakes are owned by mainly FIIs that have gone from 10% to 55%. DIIs gone from 4% to 15% in last 2 years, and public holding has come down massively from 81% to 28%. Point here is that when there are no promoters, what is happening is that the float of this company, the availability of stocks in the market is very, very high, right? And when that happens, a lot of block deals will happen. So for example, very recently, 6th of March 2024, a block deal happened. And at that time, the stock prices fell down. Important point for us to understand is why this happens, that during the block deals that happens, the stock prices fall, because mainly block deals happens at a discounted price. For example, in this case, the floor price that was set was 160 rupees, which was discounted at around 4% discount from the closing price, right? So when this happens, market will adjust to it and the prices will fall down by 4%. So a lot of block deals are likely to happen in the next 1 year, 2 year, or even ongoing basis. And you will see that all of a sudden Zomato prices drops by 4%, 5%, 8%. So if you're a weak-hearted investor, don't invest in this company because there is a huge float out there and you will all the time hear this news that Zomato is crashed by 8%, 7%, 6% because there's a block deal going on. This is a key risk with this company, and please make sure that you understand this risk before taking any bets into Zomato. Let's now look at the valuation of this company. If you go and look at the PE ratio of this company, it is at around 141 at the time of recording this video, and the PB ratio is at around 7.44, right? So from a PE perspective, I will totally ignore this, because in the next few quarters, in my view, when their earnings go up, the PE will contract if the prices of the stock do not go soaring like what it has been, right? So hopefully the PE will come down, but right now I think it's better to ignore the PE. And also you will notice that many of the tech companies, so for example, Info Edge India, I did create a full video on this. You must watch that video as well, is running at a crazy PE of 353. So I think right now all of these tech stocks are just trading at a very, very high PE. But if you look at the PB ratio here, 7.44, I think it's a very decently valued company right now, because of main reason that I said, about 12,000 crore rupees of cash that they carry in the balance sheet. From that perspective, yes, if they have got 7.44, which is almost 3 to 4 times higher than the industry PB, I think it's reasonable to expect that much of high multiples of PB. Rahul, all of this is fine. Tell us whether we should take positions in this company or not. Or if I'm sitting on profit, should I exit this company, is the main question that people are asking. Let me summarize few critical points for you. Point number one is that from a revenue and profitability perspective, in the next few quarters, what is likely to happen is their Hyperpure business and their Blinkit business is going to become positive EBITDA business. When that happens, their PAT, which is the profit after tax, is going to go up. And when that happens, anytime these things come in the news, the prices of Zomato share is going to go up only from here on, right? So from a price perspective, what is going to drive price is that whenever these break-even points come into the journey. The second point here that I want you to be aware is the risk of very high float in the market, and the prices will go down at points when the block deals are happening, right? Now, from a long-term perspective, I think this stock is going to do really, really well in the market. In the last 14 years, they have established themselves, they have built the right technology, but it is only we need to consider buying this stock at a price that is not all-time high in my view. There is going to be a lot of opportunities where you can buy it on dip whenever the block deals happen. Accumulate it over a period of time is what I think will become more sensible choice. Again, it's not a stock recommendation, but in my view, in the long term, the prospects of this company right now are looking positive. Things may change in the 6 months time, things may change in 12 months time. Just a full disclosure, I do not hold this stock right now. I may take positions in this stock in the next few months. And of course, you are free to take your own decisions. Do not take this video as a stock recommendation video. Do your own research and take your bets accordingly. I hope you enjoyed this video. If you did, let me know in the comments a simple thank you. Hit the like button. Also, you can consider subscribing to my YouTube member community, because I post a lot of in-depth analysis of stocks and mutual funds, and you will get benefited from that. With that, I will see you in my next video. Until then, keep rocking.